Let's go ahead and send this to the Telegram. All right. So we're going to give it some time here. It's not quite, it is not quite 9 o'clock yet. But what we can look for and what I can explain to you what we're looking for today, relatively super simple. So this 4 hour in the next 6 minutes is going to close bearish, right? So we're looking at this to close bearish. We want to get in on the top wick and a continuation down. The overall structure is bearish. Prices tapped into a key level of resistance there. We want to see a corrective structure back up and then a continuation down, ultimately coming down to break these lows within this bearish structure. That's if this in fact if this current 4 hour candle is going to close bearish, which it looks like that's what it's going to be. So on the smaller time frame, what I'll be looking for, let's go to the 15-minute. Was it the 30? What was we looking at? Oh, okay, it's the 30. So I want to see if price can tap into this level here and we get a bearish candle on, let's say, the 5-minute. Once we tap into this level to close, then I'll be looking for price to continue pushing down. My target will likely be at this level of, or my target will be at this level of demand here. And it's likely, like I said, in the direction of the current trend that price can go down. It's just based on this, all on this. So we would see price tap in near the 4 hour high. That'll be this current 4 hour candle's top wick, or the current 4 hour candle that's going to form top wick. Won't break the previous high of the previous 4. We know on the smaller time frame, the 30-minute, we're looking for a demand flip or a supply flip off of this zone here, and then look for that continuation to the downside. Something similar of, a trade like this. At the very least, let's say we put stops above here and our entry comes right there. We're looking at about a 1 to 2 6 risk to reward. But this 4 hour candle, for this to be that, this 4 hour candle has to close bearish. If it closed bullish, then we'll have to reevaluate the structure as far as the trade that we're going to go for. But it's looking like the bears are trying to hold strong here. So that's a good sign. Yeah. So we just got to wait for the next 4 minutes for this candle to close, and then we'll go from there. I think I'm going to set it up to where you guys can see my actual charts. Like, these are my charts, of course, but my actual, entries, because I don't trade on TradingView per se. I have another screen over here that's showing me for my prop firm. I actually got 2 that I'm working with, or that I'm trading with, shall I say. And I just got 2 of my accounts back. So I had 400K in funding that I had on hold with Nova Funding as they did their migration. So I was able to get those 2 accounts back, and then I'm trading also with Funded Peaks. There. I had the accounts that I had with TFF, they completely hold me. The accounts, so man, it's so crazy. For one, they wasn't paying out, so it was like almost no use. You're having to fight with people to get certain things right. I had a trade breach. I got 2 of my accounts breached. It was a 400K and a 200K, and I think it was also it was a 400K and a 200K, and they got breached. I had a stop loss set. I had a funded one. Okay, so no, I had a funded 200K. I had a 200K challenge, and then I had a 400K challenge as well that I was trading. and so crazy. It's crazy how it could be, but they breached my funded 200K, my 200K challenge, and my 400K. So 3 accounts. I also had another 200K and 100K. So I had a total of 5 accounts. So they breached 3 of my accounts on a gold trade that I took, and literally had my stop loss set. And when I open, I'm telling you, when I open it, price is like way up, and my stop loss is set on the trade. Like, I can look at it, screenshot it. I have a whole screen recording of it and everything. My stop loss is set, and they didn't execute my stop loss like at all. The trade just ran, and I didn't even know until it was deep in drawdown. So I ended up on all 3 of those accounts getting a daily equity breach, which was crazy. And so I'm in there fighting with the members of the board, trying to get my accounts back, fighting for these accounts, and they basically was like, nah, we're not giving you those back. And I'm sending them the screen recording of the videos of literally my trades being active with a live stop loss that was set before the trade was even, as soon as the trade was executed. Because with TFF on your funded accounts, you have to take a trade with a stop loss set or it's a violation. So all of my trades had the stop loss set prior to entry. It's just a thing of habit that's really good that you should do realistically for all your trades. You really do want to have unless it's like high volume trades. Sometimes we just got trades that are super high volume, so you just got to get in real quick and then quickly set your stop loss after, because with the smaller time frame, especially since that's what I execute on, a lot of time, or not a lot of times, but sometimes it can be moving too fast that it won't give you essentially the entry that you want to see. So price just closed bullish. It closed as a weak bullish candle, though. We could see another push up coming off of this. So let's break down what's going on here. So we just got a bullish candle. Let's first take a look at the DXY and see what the DXY structure is. So for those of you who may not know, the DXY essentially is the dollar currency index. And what the DXY does, we got that gap fill play. So I still think this is larger time frame bullish. I think this is just a correction down for a continued bullish push up. And why I think that is because we got essentially this gap fill, but on a smaller time frame, if we dial it down here, what we have happening is a change of character. So, or not a change of character, but a break of structure, shall I say. Sorry. So price is creating higher highs and higher lows. And we know that if you don't know about gap fill plays, we'll have to talk about these gap fill plays. Gaps in the market get filled. They get filled every time. Almost 100% chance. I wouldn't say 100% chance. 90, well, it's pretty 100%. From the markets that I've seen and studied, it's almost guaranteed that you're gonna get a gap fill play. If you have a gap, it's gonna get filled. So we look for price to fill this gap, and if you just notice, this structure is creating higher highs and higher lows. Even though it's low volume structure, you can see the higher highs and higher lows being created if we draw a simple trend line here. And I don't use trend lines in terms of trading the trend line in and of itself, but essentially we have these higher highs and higher lows. That's what it helps you to indicate that price is still moving bullish. It's just a physical way that you can see it. I wouldn't trade off of trend lines though. Always on structure, because trend lines vary and everybody draws trend lines differently. The one thing that I noticed about trading, and the one thing that was because I used to trade just based off of trend lines, and I'm not saying that you can't be positive off of or profitable trading trend lines. Tori trades, she trades off of trend lines. I'm not sure how profitable in terms of her strategy it is, but she seems to make a profit. And then with the type of industry and being in education, she's got more capital that she can put towards her accounts, taking less trades. And trading this essentially this trend line type strategy, I can't get down though, because it doesn't price what's the difference between me drawing a trend line here and drawing a trend line here? Somebody might draw it different ways. You either go from the points at the bottoms or the body of the candle. Some people just put it anywhere, so they aren't accurate. But what is accurate, what is consistent, what is something that we can all look at and clearly identify? Demand zone. Demand zone. Demand zone. Higher highs and higher lows. Demand zone there, price pushed down, respected off of it, came back up, came to that smaller time frame demand zone, respected off it, created a new high. We can all see these demand zones equally. So since we all can see it, so can other people, and it's just a higher probability. It's higher probability to respect off of structure. So what is structure telling us? Well, structure is telling us that we have this gap to the upside here that price just filled. On the larger time frame, we are in a process of creating higher highs and higher lows. Now, what is important, very, very important as far as the higher highs and higher lows thesis and statement, price came down to this level here. And when we came down to this level, though we broke through this low, so we broke through this low, came back, retested this structure. On Monday, we was talking about how there are two different types of entries we would look to take. There's a retest, and then there's which would retest a previous high or a previous low if it was in a bearish structure. But then there's the full-on corrective structure. So you got your retest, which would look something like this. Price would break up, you would come down, you would retest. It's generally in a time of high volume or high volatility, whatever time frame you're looking at. You get a corrective structure, price can't pull all the way back, and you get a continuation. And you'll see that retest commonly be the area that price likes to flip for that continuation to target said high. And then you have the other one, which would be a full-on corrective structure to a demand zone. So like you would come back down, like how we just saw price was creating higher highs and higher lows, and it would go to those key demand zones, not breaking the previous low. Now, why is the previous low important? Well, if price starts at this level and it goes and breaks for a new high, that is solidifying that we're still in this bullish structure. And so we look for this area to not be broken when price comes back down after making that high. And when price gets into this area, that first bullish candle that we see that forms after it taps into our level is where we want to take our entry for price to continue pushing in whatever the direction of the trend is. So you get your demand plays, the supply and demand plays, and then you got like a retest essentially. And it's all based on trading the next 4-hour candle. So for instance, remove drawings. Just on a clearly non-biased look, what we see here and what we've seen on EURUSD, we're probably getting some bullish momentum, is that though price is in a bearish structure, and I was biased to price retesting in here in terms of really where I wanted to see a flip. Why do I want to wait to see or not necessarily wait to see a flip? Because price doesn't necessarily have to come into this area. If this candle would have closed bearish, it's more likely now that we see a continued move to the downside. It is still plausible based on structure, both on the smaller time frame in this area and the larger time frame, that price can continue to go down. But we have this bullish candle here, which kind of makes things we have to change. We have to wait a little bit longer. Essentially, if this is going down now, this candle closed bearish, that's a better sign for us to be able to take that entry for a continuation down. So like an example, so we traded, and this is not necessarily the best example, but on Monday we talked about the trade that we took on Monday. We got a 1 to 2 risk to reward on a smaller time frame. So it was in our session time. This candle had just closed bullish. What we wanted to see is now a pullback in the next candle and a continued bullish move. But we mentioned on the Telegram, so let's go and just walk through this on the Telegram because it'll be easier to just show it that way. All right, so when was this? Monday NY session. Was it here? Okay. Okay. Yeah. So we talked about it. Yeah, we're up to date. So we had talked about it on is this moving? Can you guys see this? It's not moving on my screen, but hopefully you guys can see it. At least it's frozen in the right spot. So I said I'm currently in EU buys. Before that, I had mentioned up here that there is an EUR USD long potential. Now we had talked about the possible long on the live session from Monday, but I said as soon as I mentioned on the live, I'm looking to scale into the buy move on EU after a tap into our demand zone and a bullish candle close and look to target the 4-hour high. So this was this oh, wait a minute, hold on. Okay, yeah, no, we're good. So the entry that you're seeing, I said after that, I said I'm currently in EU buys from our key level of demand after a bullet 1 minute close. Keep an eye out for 1.10668 level of resistance, because a failure to break 1.10714 levels can result in a steeper move down. So what the heck am I talking about? Like, okay, I got you. I'm gonna show you. I come over here. Let's go back to trading view. All right, so we're looking at trading view, and we are in what time frame? This area. So price had just came off of a bullish 4-hour candle. If we take a look on the 5 minute, I believe, you can see, yeah, you can see here that price is creating higher highs and higher lows. This is what the time frame was based off of and the trade was based off of. Price is in a bullish market structure. What did we see just happen? Well, price came down to up here. So within that 4 hours, because we're on a smaller time frame, price came up here and it closed up here as a bullish 4-hour candle that I had mentioned, right? So what am I seeing here? For one, we're in a bullish market structure. We got a high created, a low, a new high get created. So like I was just talking about earlier, the area this would be our demand play. This is the demand play that I didn't necessarily take, but I was scaling into. So what happened? We have an impulsive move up. This is a great sign. So this is indicative of a bullish structure. We have a nice impulsive move up. Then what do we have following that? We have a corrective structure. The difference between an impulsive move and a corrective move. An impulsive move is generally in the direction of the trend, or it's generally a reversal. So you'll see an impulsive move. And what is indicative of an impulsive move? What's indicative, shall I say, of an impulsive move is price moving with a lot of volume. So it had a lot of volume pushed up here, created a new high. Then we get our corrective structure down. It's a slower move. We actually talked about how my brother took this trade from here, stops below in that corrective structure move. He got in here within this, or after this candle here, stops above there, and price pushed down. What he failed to realize was that it was a corrective structure move. So he executed properly. He got the volume. He moved his stops to break even. But what he should have been looking at is this demand zone and where price could potentially go from this demand zone. So he ended up taking a break even trade, but all he had to do literally would be to close there. You know, in hindsight, it's 2020. We talked about it, and it's something that we know how to do now. So we had a continuation move. We had a push back up. So what happened? We're in this bearish trend. Price is moving down, creating lower lows and lower highs. Comes to that key demand zone. And why is this our key demand zone? Is because this is the starting bullish push that broke this high up here, or that broke this high, excuse me. So we had a new high get created, came down, respected off of that area. So what do we see happen? This went from being now a bearish structure to now being a bullish structure. Impulsively, it pushed up impulsively, that broke all these previous highs that was in, or these higher or lower lows and lower highs that was in this bearish structure within this wave, that corrective wave. Price closed up here and the 4 hour ended up being bullish. So then what we talked about on the live was that entry that I was looking for after price reacted at this level here. So I believe it was it was this 5 minute. So, and I had an alert set there, and you can go to the live stream on Monday and rewatch it. But when price came to this level here, I went down on the smaller time frame, the 1 minute time frame, and I wanted to get in on the first bullish candle that happened after price tapped into this level. So as soon as price tapped into this level, because this essentially was the 4 hour had just started, previous 4 hour closed bullish. I wanted the 4 hour to continue pushing bullish and see a steeper move to the upside, which was at this 4 hour level of resistance up here. So I had two targets, this high and this high initially. Now, since I'm taking my trade on the 1 minute time frame, when price came down, tapped into this level, we got this bullish structure. And for the sake of not getting taken out by spreads, I went ahead and took put my stop loss was under here, like 3 pips, instead of going, like if I was trading a 5 minute or like maybe a larger time frame or maybe even gold, I would just set my stops below this level here. But you see, this is only a 1.7 pip stop loss, and generally the spreads for your average broker is around 1 pip. So I don't like to be in anything less than about realistically 4, but price, as far as where the structure was at, it's a good chance that it would continue its rejection. So what do we see happen? I had a target of up here at these highs, and my entry was actually 116. So talking about that spreads, as soon as this, and it was actually like 20 minutes before this 1 minute candle closed, or 20 seconds, shall I say, before this 1 minute candle closed, I went ahead and took my buys, but I got executed at 1.10616 level, which was above this area. That's what I mean as far as in terms of the spreads for it. Let me just look at the chart, make sure I'm not missing nothing crucial. Okay, no, we're good. Price is moving up, but and I told everybody to be on the lookout in the Telegram for this level here. 1.10668 was the level. So this area of resistance, and why this area of resistance is because, well, price could flip off of this level and you can see a steeper move to the downside. And since that was probable, and it all depends on how it reacts when it gets to this level. So when we started to get the volume and we got to about a 1-to-1 risk to reward, I went ahead and just moved my stops to break even, and it became a risk-free trade. Now when price pushed up here, which was at about a 1-to-2 risk to reward, I told everybody in the Telegram that I was just moving my stop, or I'm not moving my stops. I closed 90% of my position at this area, because we had talked about if price doesn't break this high, there's a chance that we get a steeper move to the downside. And why is that? Well, if this is in fact a bullish structure, price broke out of this downward trend, we have now a bullish structure, then this high needs to get broken in order for price to continue pushing up. If it rejects off of this area, and instead of breaking it, it rejects off of it, then there's likely a correction that's going to form, and I don't want to be in on the correction. So price pushed up, got in or got out 90% right there, move stops to break even. When we got this move up here, I went ahead and moved my stops below this low, and you know, I'm gonna put my stops back to where it was. It was at 8416 was my entry. So you can see that when price got and started to break this high up here after this corrective structure, I moved my stops below this low. Oh man, there, for now a continuation to see if we can go and break the high. And at this point, I'm only in at 10%, so it's really not anything crazy, but we already secured 90 out of 1 to 2, which is a good trade, especially in a low time of volume. This day was relatively low in volume, which is why we are on the 1 minute time frame. So the trade took all of 15 minutes, and then when price got up back up to this high and we formed this bearish candle right there, when it pushed back up here, I went ahead and closed the rest of my position and just called it a day. And you can see that price pushed up to this area and then it pushed down, forming a corrective structure. Now it did end up going and breaking that high that we were looking at, but at this point we're out of the session time, and I rather close my profits right here than go through this full thing of drawdown and then go back up a couple hours later just to get a couple more pips. It's not, it's like a pip and a half, you know what I mean? It's not worth it. So quick and easy, a 30, or it probably took, I want to say, all of 15-20 minutes. Where are we at? Yeah, so this was the trade. So 15 minute, so 30 minutes. So two 15-minute candles from the entry to the exit point. It was about 30 minutes. Which 30 minutes is fast in the trading world. I'm not gonna lie. To make a 1 to 2, I made a risked 1 point, or I was trying to risk 0.5%, which is $1,000, but I ended up risking a little bit less, which was like $750. So I made a 1 to 2, which was like $1,500. And then yesterday, for the session, just want to make sure I'm not missing anything. Yeah, so this is bullish reaction. I still want to see how price reacts in this. Hold on, let's clear charts. I got it up on another screen, so I'm keeping an eye on it on another screen here. But I want to see how price reacts within this level. This current candle doesn't have a bottom wick, so that's a sign that price can now flip down to the downside. And like I said, the overall larger time frame structure is within this wave, and it's been a very slow, week in terms of volume. You can see the past couple weeks we had bigger and steeper moves to the downside, some high volume moves to the upside, some slower times too, but in terms of volume, this is really kind of range bound. So we're making something shake out of nothing, for real in terms of your average volume. And you could say something like gold is more volume in terms of pips, and it does, but gold had been ranging. This is on the daily time frame, so let's look at it on the smaller time frame. Gold had just been ranging here. This is the 4-hour time frame. So I will say that every time price came into this 4-hour level of demand, you got an immediate rejection. Tap into this level. It's a 1-hour candle of demand, and let's refine that to the smaller time frame. Let's see. Yeah, no, it looks consistent. So this area, every time price tapped into it, which is in fact an all-time high. This is not just any area. If you look at gold, if we can zoom out here, let's go to like the weekly. Gold is in no man's land in terms of volume. Gold has never been this high. This is the start of gold, and gold throughout time and throughout history, let's look at it on a monthly, just increases because the price of an inflation increases. So naturally gold goes up. This is why a lot of really, really wealthy people, they hold their money in gold and not essentially in the banks, because no rich people holds their money in the banks. They either have their money in real estate, stock markets. They have some type of tax relief and growth strategy for their money. That's the way you get that rich, and so they'll invest their money in gold for the long term, and they'll just buy gold because over time, it just, like I said, it goes up. If you've been an investor since, let's say, 2008, well, you've seen your profits from gold go from 686 in the next, you feel me, what is that, like 15 or so years, go up, 3 times what it was. So whatever your initial investment is 3 times. And this essentially is how you make a long-term passive income. A lot of people will look for really good areas to go long and hold for a longer time frame positions, being that, gold in the long run goes up. That's the difference between an investor and a trader. So we're not investors, we're traders. So we trade gold. But in terms of this week, or this week, and every time gold taps into this level, it's just been low and slow volume. Can't even lie to you, low and slow volume. So we've been trading EU because it has a more clear defined bearish structure. Even though it's been slow, we can see that price made a low, high, retest, came down, made a lower low, retest, came down, made a lower low. We're in that retest. We want to see price come down, make a lower low. And our premium zone for price to go would be up here. So there's different areas in the markets that are higher probability chance trades if price goes to those levels than other trades. And why is this our premium zone? Well, as you go on a 4-hour time frame, you see that this is our level of resistance. Yesterday when we took our trade, let's break down yesterday's trade real quick. We was looking at it. Price had just closed. Let's take a look on a 4-hour time frame. Closed as a bearish 4-hour candle, right? And it just broke a new low. So this is some different stipulations for this. Price had just broke a low with this push down here. Closed as a bearish candle. We wanted to see a retest to this level. Hold on, let's go down and refine it some more. 5-minute time frame. Okay, so we wanted to see a retest to this level and a continued move down to break the previous low, the previous 4-hour candle low. So the 4-hour candle just closed bearish, but it broke a low and it closed bearish down here. We wanted to see a pullback back up into this level, which was our demand area. And why I want to see it go to the demand area instead of going to this area here? Well, for one, we wasn't looking at the charts until price was already in this push up. But it's called a shallow break. Generally, when you get your demand zone trades, supply and demand zone trades, shall I say, it'll be a shallow break. So price will push up, but it'll barely break the high. And if it barely breaks the high, there's a good chance that you can see a steeper correction down. As far as if it blows the top off the high, and this means that there's a lot of volume in the markets. And if there's a lot of volume, price does still have to form a retest, but it would just be a retest here because there's so much volume. It wants to hurry up and get back to going in the direction of wherever that high volume is. You see this a lot with like news events and things of that nature. So anyways, I digress. We're looking at this. Yesterday's trade was looking at this area right here. I mentioned on stream that if price, as long as price doesn't break this high, then price is still bearish. And why is this high? Because price on the larger time frame is creating lower lows and lower highs. So you can see that we had a low created, high, lower low, lower high, lower low, lower high, lower low, shallow break, you feel me? And then we wanted to see a correction to retest this area here, which was technically within this bearish structure, our key level of demand. So on the smaller time frame, if you take a look, you can see that each of these individual waves up and down are waves that both we've traded, but you got to dial down to the smaller time frame to clearly see the structure. So price was creating lower lows and lower highs within this bearish structure here. We have a larger time frame level broken with this push down. Larger time frame level is broken. We wanted to see a corrective structure up. As long as this high isn't broken, which is our key low that broke for our previous low. Our previous low is there. Price pushed up. We get our correction back into retest, and then we got a new low created. So since this new low was created and broke this low here, this becomes our key high. And so as long as that's not broken, the structure remains bearish. But within this area, we're seeing lower lows and lower highs within this bearish structure here. And then we get this push of the larger time frame structure. So when price tapped back into this level of demand, I wanted to see a rejection off of there. We got a rejection off of there. Look at it on the 5-minute time frame. I went ahead and took my entry after this 5-minute candle close. Boom. Set my stop loss above this high here, and was wanting a corrective structure or a continuation back down to break these lows. You see that we ultimately got back down and broke these lows. But what did I do? When price gave me some volume, I'm like, okay, good. We're running good. Let's go ahead and move stops to break even. Move stops to break even. What didn't I account for? PMI data comes out right after we hit these lows here. 9:45 PMI data comes out. Dang. Why is the new knowing when the news is there is important? Is because you get things like this, which is a liquidity grab. Price pushed up, grabbed the liquidity above this high, and this is how market makers take out traders, because like I said, we all see this area of demand, and you just got to refine your eye. But once you refine it, you'll be able to see this too. And the market makers know that these area of demand is where people are going to take trades and set their stops above that. So when news comes out, you get things like a liquidity grab where price goes up, and then you see price and you generally get stopped out. Some will get stopped out. I got taken out at break even because I'm quick to move stops to break even, understanding this. Because, you know, I don't like to lose on trades that have a lot of volume. If price has volume and price is supposed to go down, it'll continue pushing down. And it likely would have had we not had, you know, a news event come out that, you know. But what it was I supposed to do, got taken out at break even for yesterday's trade. Could have got stopped out because we had our stops above this previous high. What was I supposed to do? Wait for the PMI data to be released, understand that this was likely something that could happen, and after the release, get in on the entry after the first bearish candle close within this area, which would have been this liquidity grab candle, and then take my entry, set the stops above the liquidity, and then set my take profit back down here. So I just took my trade essentially too early. What you'll start to notice on EURUSD is that a lot of the entries happen 10 o'clock or later, or right around 10 o'clock. So you get that 4-hour candle that closes at 9. We already know what the direction is for the next 4-hour candle based on what that 4-hour candle had closed. So we know what our directional bias is, which direction we're trying to trade. Now we just got to find the entry. We find the entry location, and then from there we wait for the entry, and then we execute. So it could have been a 2.8 risk to or 1 to 2.8 trade, but it ended up being a break-even day. And I'm not even gonna lie, last night during the Asian session, I just simply folded. That's what it came down to, because I was cooking, and after I got done cooking, I started eating, and when I was eating is when it was like 9 o'clock and the 4-hour candle had closed. And so I missed the Asian session trade for yesterday. This is the area I wanted to go. Very, very slow volume. But what do we see happen on this smaller time frame? Price is creating higher highs and higher lows. You got to dial down to the 5-minute to kind of see it. So this was at the start of the Asian session. The previous 4-hour, we always start with our top-down analysis. The previous 4-hour at that time had just closed bullish. So we had this 4-hour candle that closed bullish right here. So we like, oh, or no, wait. It might have been this candle. No. It had to have been this one. What is this? 2100. Yeah. So this candle had closed bullish, just closed bullish. So we like, all right, bet. Where could price go? We could probably go back up, potentially retest up here. But I don't want to be greedy. You know what I'm saying? Because this was a corrective structure trade, because the overall larger time frame structure is down, and we have very, very low volume. But I've seen this area, because this is where price had closed at. This that 4-hour candle. Let me go to the 5-minute so you can see. That 4-hour candle closed right here. So this was the start of the new 4-hour. So we already have a bullish 4-hour that we're coming off of. Price pushes up, pushes down. I like to trade at 9 o'clock. So 9 o'clock, 1 hour after the Asian session starts, is where I like to take my entry. So you can see that even though it's a slow and low structure, price is creating higher highs and higher lows, or higher lows, I guess you could say. And this would be 9 o'clock started here. So this is when I'm looking at the chart to trade. And what we just had is a liquidity grab this low, but it didn't break this area here. And why could it push all the way back right there and not break this area? And why is this our key area? Well, on this smaller time frame structure, this is the start of the move that broke this previous high. So price started here, pushed all the way up, and it was slow and ugly. It wasn't a clean one, but it broke this high. So as long as it doesn't break this low, in theory, it can go back up to break this high again. So at the start of the session was here. So price pushed up, pushed down. I'm looking at it and I'm like, I want to get in right in this area. So, well, this is where I wanted to get in at. I didn't see it until it was right here. We got to look at it on a 5-minute time frame because yeah, okay. So I didn't see it until this candle was forming bullish. Now, I wanted to have had my entry because prices just was playing off of this supply and demand. I wanted my entry to be down here and a stops below this low, but since it would only be 2 pips, I was going to go with a safe one and put it 3 pips below this area so that I can equate for the account for the spreads. And all I wanted price to do was hit this retest level on the 15-minute. That's all I wanted. Right there. Boom. That would have been a 1-2, 2.5 risk to reward. Now, what do we know about these corrective structured trades? And oftentimes, they reverse. So when price would have gave us this volume and we would have got close to here and this candle started to close bearish, really at a 1 to 2, I would have likely already taken 90% of my profit, similar to the trade that I took the day before. And then see if we could continue. Price push down, move stops below this low after we get another move up, and then likely would have did the same thing. It started rejecting, closed profits likely around here. The rest of the profits around that 1 to 2. So we would have got a quick 1 to 2 trade, and it would have been literally a quick 1 to 2 because I don't during Asian session I only trade from like 9 to like 10 because I'm trying to go to sleep at 10. So if I can get a quick trade during that little window of a session, then I'll take that. For a New York session, New York generally has a little bit more volume, and we see bigger moves on New York. So I'm up then, so I can wait for 1 to 2 hours, I would say, for a trade to play out essentially. So we're seeing this move up here. And I guess the trade that we could have looked at, I'm not inclined to taking this after this. I mean, this is a strong sign of rejection, but I don't like trading in between structures of a larger time frame. And what we can see here is what we could be seeing is that retest to this key area. Because like I said, on the 4-hour time frame, this is what we're looking for. We want to see price push down. It broke this low, corrected back up, broke this low here. This becomes our key high on the 4-hour, and we could retest that. It was shallow break now, shallow breaks. And what is a shallow? What would be indicative of a shallow break? How do you differentiate a shallow break before a different break, which wouldn't be a shallow break? So let's say, well, we already have a relatively low volume, but a shallow break here, price didn't close, like a full candle didn't close below this low. That's what I mean by a shallow break. So we had a shallow break, likely a demand correction, which is why we took that previous 4-hour trade, or wanted to take that 4-hour trade for that retest for price to go up. Like we said, it could retest up here. I didn't want to be greedy. I went to the 15-minute and said I'll just take it if it get to there, right here, this area. because that previous 4 hour had closed bearish, so we had one candle closed bearish. Essentially, after you get a break of a low and you get this larger time frame candle close bullish like this, you will really want to take an entry like at the start of that new daily, because the best entry would be somewhere within this candle so you can get that full move to that retest location. But I like to trade the Asian session, and I found a way that I can, take a quick trade and not be in a trade for, too long, because generally during that Sydney session, price is slow. So like with yesterday, we was in like, I want to say this area. You got to look at it on a 5 minute to even see it. Yeah. So price was in this area, and it was real slow within this area. I mean, yes, we did have some nice structural moves for a continuation up, but it's also like, where do you scale in at that point? I prefer price to develop the structure. I come into a session time where I can expect at least a little bit of volume and trade that. It's just a higher probability chance. Those are the highest probability chance trades inside of your session. Like, this strategy works, and it works like a charm, but there's some stipulations. You have to trade inside a certain time frame, a certain session. It's applicable to any chart. Well, I won't want to say any chart, because certain charts move at different times. Like if you were trading a JPY pair, like let's say USD JPY, let's just put USD JPY during the Asian session, USD, let's do GBP JPY, and I only trade EU GBP JPY. I only trade EU and gold. I guess that's the same structure, but generally during the Asian session, these JPY pairs have more volume. EUR, the best time of volume is generally London session, which this, you can see this was a London session move here, and New York session, this was NFP, or not NFP, but this was like I think it was CPI. It happened. It couldn't have been CPI. CPI is generally on Wednesday, I think. I don't know what it was, but I remember we had news that day, and that's why we had got this explosive move to the upside like that. And a lot of times on gold, especially, you'll see Fridays are generally, I wouldn't say generally, but there's a lot of Fridays where we'll see more volume in that Friday than we had seen almost in the whole week. Like, let's see, what day is this? This is a Friday. So, like, you see how the week started. Monday, this is the daily time frame. Tuesday, Wednesday, or wait, hold on. Monday. Oh, no, this is Tuesday. So, this is Monday. Okay, so Monday had a lot of volume, but within this week. But you see Monday, a lot of volume early on in the week. Tuesday, Wednesday, Thursday, corrective structure. Thursday, you get your corrective structure flip, and then you get a continuation to break this high volume Friday. But it's just, so there's a lot of Fridays where, like this Friday, a lot of volume in terms of, I mean, we had some on the downside for Thursday, but you know what I'm saying? You get the point. There's a lot of Fridays, and Fridays, I generally a lot of times didn't trade Fridays, and then a move that I had been waiting for all week, specifically on gold, would happen on a Friday, and it would make me so upset that I wouldn't trade it. Like, let's say, for instance, this week here, there was some specific time when gold had created. I had been waiting for a break here. I think it was this one when we was creating the all-time high at 2100. It's crazy. Gold just moves like a rocket. I think this was on a Friday, if I'm not mistaken. No, Monday, so Sunday. One of these times, essentially. That's beyond the point. But a lot of times on Friday, you get a lot of that late volume for gold. Now, let's keep an eye on EURUSD, because what time is it? 9:41. I'm looking at the 30-minute time frame over here. We're starting to see some 30-minute rejection off of this area that we were talked about. And so this level there, we could be looking at an entry here. Let's see how the 5 reacted. That's cool. So this 15, I'm gonna let this 15-minute candle close. If we get this 15-minute bearish closure, I'm gonna go ahead and take an entry, a sell move for a continuation. I'm gonna set my stops above this high, since this is a relatively better volume move. About a 5 pip. I'm anticipating like a 5 pip stop loss, and final take profit can be down here. I likely, like I do with most trades, will close within this area. Majority of the trade within this area I don't want it to. So let's see. Hopefully she don't just take off without us. I mean, this 5-minute is already showing that it's going. So I'm going to go ahead and take this at a dang, what's my risk? Let's say 10 lot. Okay, let's see if we can get a pullback of this next 15-minute candle. So after the 15-minute, I want to get about a 5 pip stop loss. Which would be relatively there it is. Come on now. That should be like a 10 pip stop loss at a 0.5 risk on a 200K. 5 pips, 10, yeah. Okay. All right, so I'm gonna go ahead and take this entry now. So we're gonna get in a sell. We're gonna put my protection order, stop loss 1.01588, and I'm gonna go ahead and send the order. All right, so I just took a sell. I got my stop loss above this high here, and we're gonna look and wait for price to go down, and hopefully we can get some volume. We can break through this low. Realistically, not being greedy, this could be the overall take profit here at a demand zone, because generally this is where you get your correction, and I'm not trying to sit through a correction. I want to see this candle move down, this next candle give us some volume to the downside. This is based on, essentially, this candle is bullish, but this is based on a larger time frame resistance, being and seeing that if price can hold here, we can get this flip down and a steeper move to the downside. So that's what I'm taking the trade on. I don't generally recommend trading until this 4-hour candle does in fact close, but with where we're at as far as on the smaller time frame, you gotta take a look at what the smaller time frame is doing. You can see here, let's go back to, like, let's say the 5-minute, that price was creating higher highs and higher lows. Key thing was, and then it came down and it broke through this low here, which was our previous key low. So when it broke through that previous key low, that makes this our now key high. So if price breaks this key high, then this structure is just invalid in general. Our key high would be the first bearish candle that starts the move to break and change the character. So that's what I'm looking at there. So this wasn't technically based in the 4-hour or the 4-hour time direction, and it was based on, let's pull it up here. It was based on this resistance area, this level remaining bearish, and you can see right now this is we're getting a pullback here, but this current 15-minute candle doesn't have a bearish wick, bottom wick, so there's a chance that we can get a flip here and price form that bottom wick, and we'll see how price goes from there. If we just get pushed out, then we get pushed out. It'll be a 0.5 risk online, but that's essentially what I'm looking at here. Generally, I mean, a safe stop loss will be above 9, like up here above this high, which was the key high. So you don't think price is going to break that high, but I'm getting in on this here, this bearish reaction off of this area, the 15-minute closing bearish after tapping into that 30-minute candle. So you can see this is our 30-minute candle here. So this candle, 30-minute candle, is the key area we want to see the flip off of. So since we got that 30-minute candle there, refine it, first bearish candle that taps into that, that would be this candle here. And, you know, well, technically this candle, but essentially, yeah, you get the point. If you refine it to the 15, you'll see that that candle likely didn't tap into it. Oh no, it did. So we're sitting around break even. You can see that this candle, see how it got flipped now and formed that bottom wick. So now that it does have a bottom wick, this is, you know, up in the air, but there's, you know, was a good chance that you do go back down and get that bottom wick, because price generally just doesn't go up. So we'll see. We don't have the previous 4 hour on our side in terms of when the previous 4 hour candle closed, so we have to keep an eye out, like I said, for those levels of demand on the smaller time frame, because this technically closed as a previous bullish 4 hour candle. So that's all we have to be aware of, you know what I'm saying? And we're getting a little bit of volume here. Getting a little bit of volume, starting to see that 4 hour or that 15-minute candle get a little bit of that flip there. We want to see that break in volume to the downside, would be a really great sign. Price taps into here 1 to 5 to the demand zone. I'll probably go ahead and close, you know, some of my profits once we get a break through this level here, and we get about, let's say, 1 to 1 risk to reward. Oh, and it's also important to note this candle doesn't have, oh no, it does. So I take that back. Never mind. So that's what I want to see. If price does in fact continue pushing bullish, which it can, that'll just be what it is, and that'll just be the trade of the day. So there's always a if then scenario when taking a trade. If and then. What happened on the smaller time frame is price was in this bearish trend and broke out of it. So this is why this area of demand that I was just talking about is a key area where I would likely want to take my profit, because if we're thinking in terms of price, all right, how does it react when it gets here? If price gets to this level and it starts to show signs of bullishness, we could not flip and make a steeper move to the upside, because all price has to do, or doesn't have to do, is break this larger time frame high, and this structure based on the 4 hour time frame would still be technically bearish, but we would have to wait a long time for that move to happen. So what is a move that we can execute in this current session, which is this move there in the direction of that continuation, being that price on the larger, slightly larger time frame broke through a previous low. This becomes a key high. If this doesn't get broken, we can see this potentially continue down and make a steeper move and try for this area, this, which would be a 30-minute demand candle. So that is the thesis and the statement behind the trade that we're taking today for this session. And I figured out a way to document these trades that'll be more creative. So I'm gonna essentially make cinematic shorts of every single trading day for the culture effects, at least on the terms of being, you know, like, you know, YouTube content will be all about my journey, and hopefully I can display these trades and, you know, me going through the day-to-day in a creative and fun way that people can start to learn how to do this stuff. Because I mean, it isn't rocket science. Once you start fine-tuning your eye for certain things, you start to look out for certain things, And if you know to look out for them, then it makes it easier. But it'll be interesting. So I wrote the scripts this morning and I scripted, but it's really just a recap. Essentially, every video is going to be like a journal entry, and it'll be a cinematic journal entry of the trade that we took that day, what happened. So yesterday's trade where we took a break even trade is going to get broken down, and I'm also going to do Monday's trade from this week. So I'll do all the trades that we take this week during every session, and we go live during these sessions. So before for these, for the live sessions, so they're all recorded on there as well. So I'll have some, a little bit of that social proof to add to it too, that we talked about it on live. Hopefully we can get some more people to join these lives, and it could get, I don't know. I just think that would be the best way to teach trading, is to literally display the journey in every trade that we take, and not only just for you guys, but for myself included. When being able to edit these videos and go through them and really think on the trades and review it is not only good for you guys to hear, but it's good for me to go over. And as I'm creating videos, I listen and hear this thing over and over and over and over, and it just becomes reps at that point. It just becomes, doing something that you just do, something that you just understand. So I definitely am excited about this new way that I plan to create content. I think it'll be good, and it'll be a new light on how content is taught, I feel like, in this industry. I don't want to teach people. I want people to be able to learn from the day-to-day things that I do, and the mistakes, even the mistakes that I make. It'll be all there because each individual day will be documented. So like last night, it won't be Asian sessions, so I won't make a video on last night's trade that we missed out on. But a positive to last night's trade, even though I missed my entry before the trade was able to run, I explained to my girlfriend, hey, look, I missed my entry right here. Price is already starting to move with a little bit of volume, but it's likely that it'll go. And at the time, let's go through it. It was at here. So on the 5 minute, so my entry, I wanted my entry to be here. So this would have been my entry, and I have the chart up over here, so I'm keeping an eye on the trade. It's just at break even right now, but I wanted my entry to be here on this candle, like I said in that Asian session, and it stops below that low there. Likely and a little bit deeper in there, because I really wanted to get tapped in at this lower level at the demand, and then look for, not greedy, shall I say. Look for this level to get hit, because this is a likely level that price could go to, that area, that bottom. So we go back to the 5 minute. And so price was like within this area, within this candle was looking bullish. And I was like, look, it's likely going to go up to, this area here that I have mentioned. But I missed my entry. And why I don't take entries if I miss my entry is because the risk to reward gets thrown off, and I still have to maintain the same stop loss. And then the trade becomes riskier, because essentially a trade down here, if I go up here, it creates that new high, creates that new low. Now I'm setting stops at break even lower than I would up here and then you can get taken out. Certain things like that is why I would, because essentially when the volume started to come like this, I'd have moved stops to break even. If I'm entered in up here, then moving stops to break even is up here and you get taken out. And why I don't like to do that, essentially. So now I have a riskier trade that both gives me a lower risk to reward and is riskier, because a safe bet would be moving stops below this low, or where my actual stop loss to break even would be. But then you get chip damage if price does come and take you out, and it's not a true break even. So I don't like to do that. So this is why I just rather not trade that move in general. But price pushed up, started to get some volume, got a corrector structure, and then it pushed up even steeper to that area. And me not being greedy would have took my profits early bird. For like a 1 to 2, given that we get the entry that we want with the safe stop loss of about a 3 pip. So, go from there. You live and you learn. So we got a push down, came down to this level of demand. I like the rejection that we got off of this level. I want to see if this current area can hold and we can get a break below this low. This candle does not have a bottom wick, so that's a good sign, or that could be a plausible sign, shall I say, that price does push back below this area here and we're stuck at some type of resistance. I would prefer not to see a steeper move to the upside, but like I said, as long as price doesn't break here on the 5-minute, this 5-minute structure is relatively still bearish. The good thing about the trading journal, as far as recording or not recording content, but creating videos in that style, is it'll show the good and the bad. You know what I mean? Like if we get taken out on this trade here, this is going to be a video that gets made and we can talk about, you know, things that could have been better. Like if we get taken out, there's always a reason. I feel like in the markets don't do things haphazardly. There's a reason for nearly everything. So what happened here? Price is in a lower time frame trend. We wanted a larger time frame to go down. We see that we do have this reaction and rejection off of here, but the previous 4-hour did in fact close bullish after this bullish move. This is kind of similar to the trade we took Monday. And then we got our reaction off of this level because we wanted to see this initial move continue pushing down, set our stops after the resistance, and it just wind up didn't be that. So what happens, or what's happening, shall I say, because we haven't gotten taken out yet, but it looks like we're getting close. Price came down to this key level here, this area. So it pushed up, came down, then it pushed up again. It broke this area. When it came back down into this area, it couldn't break this area. That's indicative of this structure being relatively still bullish. And it looks like I have less than I thought at risk on this trade. So it ended up being a a little over a 0.25. It looks like it'll be on this trade if I do in fact get taken out up here, which is looking like that's going to be our destiny for this. So knowing what we know here, then what would be the trade of the day? What would be the correct trade? So I just got taken out there. So what would be the correct trade going forward? The previous 4-hour close is bullish. What I need to be looking for after that is we have this plausible retest zone up here, which is our premium zone that price could go before this larger time frame, 4-hour time frame structure could be bearish. And where I should have gotten in at and tried to get in at is we have this large rejection here. This was the start of the new this was the start of the new 4-hour. The previous 4-hour closed bullish. We already got a retest, wanting to get in within this bottom wick of this candle here on that smaller time frame, understanding where price could go. So price pushes up, closes bullish on the 4-hour time frame, closes bullish here. So it closes bullish there, start to get that breakout there. Getting in at the bottom wick here would be an area of interest. Not here, excuse me. So within this area, I'm not the biggest fan of setting a stop below this low. It's likely I would have definitely set my stop below this area though, because price pushed up, pushed down, created a new high, key low. That's where I set the stops at. And then look for what's going crazy now, a continued bullish move to, oh wow, we got a ton of volume coming into the markets. Well, I'm not gonna say a ton of volume, but a lot of this is much more than we've been seeing in the past couple of days. I'm not gonna lie, because what just happened, we just got a break of this high now, and that changes this overall larger time frame structure. So let's take a look now what we're looking at. So previous 4-hour candle closed bullish. Our entry should have been based off of this. So step one, what's the first thing that went wrong in today's trade? One, wrong. Well, I'm not gonna say wrong. I'm gonna say well, let's just put 4-hour closed bullish. All right. That's the first thing that we should know off of it. 4-hour closed bullish. Now, or the first thing that I'm learning from this trade. And this is a good way to identify how to learn from your losses. 4-hour closed bullish. Number 2, what happened after that? We should already, so off the rip, our directional bias is wrong because we need to be looking for trading off of the previous 4-hour in our session. Because why is this important is because generally you'll get a trade, or generally during a high volume session, you'll get a continuation of whatever the direction already was. And you just get more volume in that direction. The 4-hour closed bullish. So that in turn, now, you know, hindsight is always 20/20, but that is what allowed it for that volume in our session to push us in this bullish direction. Like we said, this could have easily, just by this candle closing bearish, could have easily been that continuation down with that volume to break this low, which we were anticipating, but this changes that. So the 4-hour close bullish, that's cool. Second thing, change of character on the smaller time frame. So we got on the 5-minute time frame, we got a change of character. So that's what happened. That change of character that we seen was in fact valid. Price was creating lower lows and lower highs on this smaller time frame. Change of character, got this volume push up, correction back down. Another thing that invalidated the bullish structure, this here. So let me go ahead and go back to my notes. So the 4-hour close bullish, first thing. So wrong directional bias. Wrong direction. All right, going after that. Following the 4-hour bullish closure, we had a change of character on the 5-minute. And then finally, the last thing was the what was that last thing? It just slipped me. Oh, price failed to break previous OUS 5-minute demand. So what do I mean by that? And this will be a great video. Price pushed up. We had, okay, you gotta see it in 1 minute. We had a push up, a creation of a new high, correction. I want to look at it on the 5-minute because that's the easier structure. We had a push up here, broke that high, and then price continued up. It did form a correction and then make another continuation up, but this ended up being a bearish, like this candle doesn't really count. And I don't mean it doesn't count, but it closed as a bearish candle. So this invalidates the bullish structure. So likely price could continue pushing bullish. Anyways, nonetheless, when price came to this area here, which is a key level of demand and where price would naturally go if it wanted to give this bottom wick, it couldn't. It rejected off of that area. And coming off of that previous 4-hour bullishness, we got volume for this session that pushed price up. And now we've had more volume in this session, which in terms of this current 4-hour candle, we've had 36 pips in comparison to the whole week essentially. You know, this was a 4-hour, your average 4-hour candle. I wish I could get an average of these candles to see how many, like how the candles within this box, what was the average pip movement. I mean, I could do it manually, but I'm not gonna sit here and do it manually. But essentially, we had a lot of volume in this session, and it came off of that 4-hour. So going forward, just wait for the 4-hour to close. Whichever direction the 4-hour closed, trade that direction. The smaller time frame confirmed it with a change of character on the 5-minute, and I was looking for a larger time frame continuation based on the bias that price in fact reacts and rejects off of this level here. And what invalidated it was the first thing. The 4 hour closed bullish. That was the thing that invalidated it. Everything as far as the setup would have been or could have been, you got the 5 minute change of character here, which was aligning with this 4 hour candle closing bullish. Because if the 4 hour candle didn't close bullish, we likely wouldn't have got that change of character, and we would have seen this continuation to the downside. Also, price would have pushed, price essentially pushed down first and then pushed up last minute. So we get pushed down. It's like, yeah. So those are just some things that going from this session could have done better. Let's see what the damage was. Let's pull it up over here. Order history. Let me see. So 687. I thought I had $1,000 risk on it, so I lost less than what I initiated. And you gotta, I say this like it's a little number, but it's only of this account, of this one 200K account. It's only like 0.25%, because you figure 1% is $2,000. 0.5% is what I normally would take at this time. Generally, I like to reduce risk. I have two accounts, so I play them differently. One account would be more aggressive than the other, but this one I take trades at 0.5, and I only took it on this one trade. So in terms of total capital, a 0.25 risk that on a wrong trade where we was able to learn a lot, that'll come in handy for what could have been a potential profitable trade. So, or for a future profitable trade, shall I say. To trade in the direction, a stop loss, likely below that previous 4 hour candle. Well, no, it wouldn't have been the 4 hour candle. It'd have been this within this 1 hour. So essentially, when price comes back to this level, you get our change of character. Hold on. So this is what happened. Price pushed down, pushed up, formed a change of character, closed bullish, then closed bullish right here. So closed bullish here. This is the bottom wick. Price pushed up, came down, retested. This is the retest play. Why is this a retest play? Because you have candles that close above this level here, which is signifying high volume. We literally talked about this today. So we got a candle that closed above this previous high that started the change of character, and then you came back down to that demand zone in there, couldn't break the low. This is a great entry. Well, so where we was taking our entry for the sale is when we should have been after this bullish candle closes, when we should have been taking our entry for the buy with a 4 pip stop loss and look to target. I wouldn't have targeted these highs. I'm not even gonna lie to you. I mean, it's likely that we would have been in for price to hit these highs because it just moves so fast. And I would have closed, realistically, as soon as it hit this high up here, I'm able to snatch profit, 110%. Or as soon as it got close to this high up here, I'm snatching profits. But we had so much volume that we likely would have held it and just moved stops to break even and ride this volume out. Ride the volume out, because when you get volume like this, you just want to, you don't want to necessarily take early. I generally would wait for the first 1 minute candle to close bearish. So, or wait for the high to get broken. So like price had pushed up to that key 4 hour high that we were looking to get a rejection off of, but it hadn't closed bearish yet. So it pushed up. This candle starts to reject. This candle shows signs of rejection. I likely would have just closed at the top, but this candle shows signs of rejection because this pushed up, broke through, came back down, it's closed bullish. I'd have just said, all right, let's get out. And then it made another push up, and then you start to see that correction back down. So we're talking in terms of a perfect trade, and we execute right. We accidentally caught a 1 to 4.89, but on a conservative basis, for an average volume day, we would have only been looking to target, let's say, we gotta go to 4 hour time frame to see it. We were only really looking to target a 1 to 4. So that's about a 1 to 4 risk to reward. That's what we were looking to target there. because this is the resistance that we thought we could get a flip off of. So, and a 1 to 4 trade is good. So we learned from today's trade. It wasn't a positive trade, but we lost less than what we anticipated to lose. And we learned from this trade and what the correct trade should have been for this session. And we'll come back for Asian session and we'll do it all again. We'll wait for that 4-hour candle to start. And I trade, like I said, that 1 hour candle, the 9 o'clock candle, 9 p.m. candle for that. But what happened too? What did we talk about today? We talked that we covered a lot of things, but we talked specifically that I told you guys specifically for EU, a lot of times that that entry for EU happens at 10 o'clock, and 10 o'clock was when we got this bullish move right here. And following that 10 o'clock candle, the next 5-minute candle absolutely ripped. And that was what we talked about before the session. So a lot of things in terms of the past 3 sessions, I think for this week, in terms of the past other 2 sessions, I think this was the most valuable session out of all of them. There's so many things that we were able to cover and to talk about, to learn from. I think that this was great. It was in the wrong trade. That's cool. Losses happen all the time. What's important is that we learn from it, and realistically, if we abide by our rules and what we should have did, we wouldn't have lost, and we could have had a stacked up another profitable day of a 1 to 4 risk to reward on a trade. Conservatively, almost a 1 to 5 if we hold it out for this volume, and that's what I do for volume. So that's not just me saying that I would have held for the volume. I literally, when you get a move like this and you get that much volume in a certain period of time, you want to go ahead and hold and see how long it goes, because it can go long. You know what I'm saying? But as soon as we break that key 4-hour high, which is indicative of this line here, and you get that rejection, I'm getting out. I don't even want to be there. It's already showing that it's rejecting off of this, and I don't want to deal with none of that. It's not about having the perfect exit point and perfect entry. Well, the perfect entry, there is a right entry to have. For every trade, there's a right entry. I don't care what trade you're taking. By this system, there is a right entry. And we've seen today that we took the wrong entry in the wrong direction, but there was a right entry right here on this candle. And even if the 10-minute, like if you wait for, there's just so much volume, you couldn't almost even catch this push up. But this was the candle that should have been our entry point. Following this change of character on a smaller time frame, and the larger time frame was showing the shines by closing bullish. So a lot of value. A loss on the day will add it to what we're at. So we are actually still up on the week, relatively speaking, about $1,000. So what I would generally risk, but $1,000 is not bad, especially since I'm only trading this one account. I'm not even trading the other 200K. I generally don't like to double up like that. Why? Because for me, a single trade running, if we get this trade to be our right trade and we set our stop loss accordingly, we get that 1 to 4 risk to reward, that's $4,000 in this trade. That turns our week from being up $1,600 or $1,500 to now being up, for my mouth just lost me, to being up now $5,500, and that's including the break-even trade that we took yesterday that we also learned from, where our entry should have been after the news, which would have given us a 1 to 2 trade. So you're talking about in terms of executing a perfect week of entry, and that doesn't include the trade, like I said last night, that I missed because I was cooking, that also gave a 1 to 2 risk to reward. So you're talking in terms of perfect execution for every session. The potential for this week, and it's all about the potential. Like, even if you don't get a trade, or you should go back through the week for each session after that 4-hour candle close for the New York session, and after that 4-hour candle close for during the Asian session, during the start of the Asian session, after the 4-hour candle close, looking at what happened there. Where was the entry at? Was there an entry? What was the direction? Where did the 4-hour candle close? Direction. if it was bullish or bearish, then going from there to change your character, or not to change character, but going from there, finding your entry location at the key level of resistance or whatever, or demand, depending on what's happening, and map out where your target would have been. And so we're talking in terms of a perfectly executed week. We had a break-even trade Sunday, which was a genuine break-even trade, and the direction was right. 4-hour close bullish. We wanted to get in on the bullishness. We got in on it. It pushed up, got some volume, came back down to break even, and formed a change of character. And then we could have re-entered on the sell move down. I'm not gonna fault myself for that because I generally only take one trade. But I did tell my brother as it was happening, like, we just had this change of character. If price doesn't break this certain area, we could see a flip move to the downside. And like, I went into my room and then came back and I was like, okay, we seen the flip. The flip happened in the next 15 minutes. Let's see if we can actually. I'll just show you guys that trade. So it was Sunday. This was the area that we were looking at. I was looking at here. So price had pushed down. When it pushed down, I was thinking we getting a retest entry. Previous 4-hour had just closed bullish. We get that retest entry on the smaller time frame is where I took my entry. So I think I took it on. Oh no, I took it on this 5 minutes. So I took it based on this 5-minute candle. So I took it based on this 5-minute candle, and I broke this down Monday. About this trade and how I feel like I could have done better. So a couple of things that went wrong with this trade. One, when I got my entry, I ended up getting a better entry than I anticipated, and I had just accounted for a 5-pip stop loss. So I think I got my entry within this 5-minute candle as it was closing bullish. The 1 minute was already showing signs of rejection. I wanted to see a continuation for price to hit a larger time frame target. Which was some 4-hour resistance. I'm not gonna go to it right now, but it ended up being the trade even at a 1 to 5 was looking at a 1 to 3 risk reward. That I do remember. So I was okay with the 1 to 3 risk reward, even though I had a 5-pip stop loss, and I really wanted to have like a 3-pip stop loss. I just wanted to account for a spread. So whatever. So price had pushed up, but notice on the smaller time frame here we have a change of character. So let's go to, if I could find it. I don't even think it's gonna show me the data. Oh, it won't show me. It won't show me. Okay, it's okay. Where's we at? Oh, right here. So we got to change a character. Price pushed up, high volume, corrected, created a new high, came back down, broke this here, and this is why I should have noticed it for, the trade that we took today. Even though this candle had closed bullish, it came to this area here. I moved stops to break even, and I actually closed half of my trade. So I closed half of my trade when price was up here at like a 1 to 1. But since I thought I had a bigger stop, like I equated for this being my stop loss, or this being my entry, shall I say, up here, and this being a 5-pip stop loss. My entry was down here, but I still did the 5-pip stop loss. So really I wanted to be at like a 1 to 2 at that area, but I was at like a 1 to 5 down here. And so at a 1 to 1, I went ahead and closed 50% of this position, because I said to my brother, if price doesn't break this area, we could flip down, because we just had that change of character and you could see a steeper move to the downside, and that would have been a target of the demand zone. So that trade should have been is a short position after this candle closes bearish, or after I noticed that this candle closed bearish and this did in fact form a change of character. to get in on this sell move down, similar to the opposite of what we had happen today, for price to go back into our 5-minute level of demand, take a small corrective structure trade. It was during the Asian session, so those are the trades that I really get out quickly, or quicker, shall I say, in terms of where I'm looking to take my entry. I'm not looking to hold it longer. If this was a New York session, likely to wait and see if price can form a correction and break these lows, but price was bullish. This was in turn at the time a corrective structure trade, so I would have just wanted to be here for the entry. So I was looking at it right here, price closed bearish. I'm like, we probably should take this is probably a sell trade right here if price closes bearish, but I went and moved stops to break even, got taken out at break even, made like $200. It wasn't anything crazy. So and I think I only had a risk of like $500 because my stop loss was technically equated for, I was supposed to have a 3 pip stop loss, or around 3 pips, since my stop loss was 5 pips. I took a I should have took a lot size trade for a 3 pip stop loss, but I only equated for a 5 pip stop loss, so I took it at that. So technically I risked almost half of what I was initially trying to risk, similar to what happened today. But we've seen that continue to move down. What happened? What would have been indicative of price continue pushing up if price didn't break this low here? And though I was looking for a retest because the previous 4-hour had closed bearish, and I wanted to get in as that 4-hour candle was bearish to get that bullish continuation, and fully aware that if price can't break this area, that we could see a continued move down because of this change of character right here. So that was Sunday. So we're talking in terms of executing a perfect week. I'm not going to count this because that was a if then, and I would have had to take an additional trade, which I wasn't looking to do initially. But going improvement, that is something that going forward I will be doing. You know, if I see that the structure has changed, it's not looking like it's supposed to be able to flip that bias and for that continuation down. But so we're talking in terms of a perfect week. Sunday was break even, so we're going to just call Sunday break even. Monday morning, we had a 1 to 2 that we made. So 1 to 2. So we're talking, I only risked 750, try to risk 1,000, 750. So I made a 1 to 2, was 1,500. Then Wednesday or Tuesday or Asian session that night, I was too tired. I'm starting a new schedule where I wake up at 4 a.m., go to the gym at 5, and by 9 o'clock that Monday morning, which was, I was knocked. I couldn't do it. So that didn't work. And then yesterday, which was Tuesday, we took the break-even trade, which we know that we could have gotten a better, we was supposed to wait essentially for the news to come out, after the news, then to trade that. So we're talking in terms of executing where are we at for the week and where could we be at being if we execute perfect. Well, we're at currently, let's say we're up $1,000. This trade would have ran a 1 to 2. This trade would have ran a 1 to 4. So that's 4,000. We got a 1 to 2 yesterday, conservatively, because it was like a 2.8. But a 1 to 2 yesterday, that would have been, so now that puts our total of 6,000 plus our 1,500 we made the day before. That is what, 7,500? So 7,500 for a perfect week, for, a week with some questionable, I guess you could say, this trade, wrong direction. This trade, break even, didn't lose anything, but didn't make anything either. So, pretty much nothing there. And then missing the trade from last night, the entry for a trade last night, which also ran a 1 to 2. So that takes our total now to 9,500. So in terms of a perfectly executed week, we're at 1,000 of our, 9,000 potential. So 9,500, which is what it would be. So still 1,000 isn't bad, but it's not perfect. You know what I mean? And we learn and we'll grow and we'll continue to build off of that. But 1,000 on a not a rough week, because we had one loss, one win essentially, and our win equated for more than the one loss we had. We just had two break evens that could have been wins. Not a bad week. Not a bad week. And we'll continue to trade. The structure has changed now into being what is showing indicative signs of a bullish trend. And so for the Asian session tonight, we'll come back and we'll do it all again. We'll look at what the structure is. We'll update it. Well, not on stream, but in the Telegram. I'll send it in the Telegram. It'll be everything that everything that I'm looking for then, and go from there. We'll be back tomorrow morning for a New York session, and we'll trade again. And so in terms of a perfect week, we have $9,500 potential and $1,000 profit. This will make for some great content, though. Some good learning trades to learn off of. So I appreciate everybody who tapped in at some point in time during the live, and I will catch you in the next stream.